Hi, everybody. Thank you very much for joining us today. We're live on Facebook. I'm Susan McCallion.
And I'm Jim McCallion.
And we've got David Wright from Sanibel Bank, along with Kristin Marks from Sanibel Bank. Jim and I own McCallion and McCallion Realty on Sanibel-Captiva Islands and in Southwest Florida. We just refinanced our home, and we used our local bank, Sanibel-Captiva Community Bank, to help us with the process. We thought this might be a good opportunity to share some of our experience and invite our loan officer and loan processor to chime in. So we'll get going. Jim, you want to add anything?
No, I think you summed it up really well. I mean, obviously the rates today are extraordinary. And so even though we had a reasonable, what we thought was a good rate on our home mortgage prior to this, I mean, when we looked at the numbers, it only made sense to do the refinance. And we're not the only ones doing that right now, as I'm sure these guys will be chiming in and letting us know about that. So kind of on that note, what are you guys seeing as far as the number of refinances that you're seeing come to you?
It's this mini, Jim. It's this hard.
We can't see your hands anymore.
Right? That's how many there are. The market is exploding with not only purchases, which are happening, of course, but also refinances. We're at about 150% of our record year loan volume. But we didn't have 50% more people. Nobody saw this coming. When we saw a pandemic coming, we all kind of hunkered down and thought things might get tough. And for much of America, it has, of course, but not in this particular segment of the market. We are very, very busy.
Mm-hmm. And when you say this particular segment of the market, what do you mean?
Well, I mean mortgage lending in particular.
Okay.
So hospitality is struggling in some sectors of the economy. In South Florida, but really nationwide, mortgage lending is not.
So how are you, I don't want to deviate too much, but quickly, how are you on new sale volumes for lending?
Records, also records. The difference between the two is purchase loans are treated as a priority because they have contract-specific performance dates. So they go to the front line every time. Refinance loans wait their turn. And the queue, you know, you just went through it. The queue is rather long. You could be in line.
Like that.
Yeah.
But,
yeah,
but I understand it.
Yeah, it's like 4 weeks just for initial review. So in other words, it seems like nothing is happening because nothing is happening. We're just waiting.
Yeah. So logistically, maybe Kristin knows this. Logistically, how do the loan processors figure out how they divvy up their time in the new loan processing versus refinance processing? Because I know Jim and I think applied for our loan sometime in July, and as with everyone else we've talked to that has refinanced, it's taken a long time because of the incredible interest rates.
And I'm sorry, what was your question again?
Oh, my question is,
my computer.
How does the loan processor, once you have your stack of refinance loans to work with, and then you've got your stack of new loans, how do you divide your time to get through your stack, given the volume you have?
Yeah, as David mentioned, the primary or purchase obviously takes precedence over refinance. But after that, I mean, we get our refinances submitted in the order that those are received. And we're luckily 9 times out of 10, by the time the file has been reviewed, we've got our insurance, our title, our appraisal in. So the additional items that are needed after that are hopefully minor from the clients.
From a loan processing perspective, is a refinance process easier or harder than a new purchase?
I think that each situation is different. It all depends on, you know, assets, income, and the whole picture. I wouldn't necessarily say that it's smoother. Yeah, I would say it's kind of the same. Nicer in a sense of we don't have to worry about time constraints with, you know, meeting contract dates, but same process.
What I did appreciate with Sancat Bank is you had a really clear, concise list of everything I needed to submit, which was a boatload of stuff. And really, there were just a few items during the process. After I got that volume to you, just a few questions you had through the process. It was pretty easy. Is that typical?
Yeah.
How most lenders
Yeah,
work?
that's typically how it goes. I know our initial needs list in COVID seems like it's been a little bit longer than it typically is, but that's typical. We send one bulk item, and then hopefully after that, it's just maybe a few little additional items we might need clarification on that were sent in or whatnot.
And if I may interject, with COVID, there are new credit underwriting guidelines. They're called overlays. So already didn't change their guidance permanently. They have these overlays in specific response to COVID, and they especially impact self-employed borrowers, you and Jim. If you were a W-2 and a pay stub, it'd be a little bit easier. But for self-employed, we have new, stricter rules, and they're harder to fulfill.
Are you finding that you're having to reject loans because of those new guidelines, those overlays?
Not often, no, but we are just having to work harder. I'll just give you a quick, for example. You have to have 2 business bank statements within 30 days of closing. Well, in the past, we didn't get business bank statements at all. But now if I say I make $100, I better have a bank statement showing $100 going to my business checking account. And we already discussed the underwriting turn times are like 5 weeks for initial review. So you give me bank statements when we start, should be all right. We just waited 5 weeks, and now we have 3 weeks in underwriting. I'll need 2 more bank statements before we get done with this project. And that's what's unusual. So it's not declining loans. It's just more paperwork taking longer.
Okay.
I received an email from one of our other lenders that we work close with, and they added a prior to funding condition. So after we, received the clear close, and they added to, I'm reading on my other screen. So, but they are wanting on self-employed borrowers, evidence of current work within 10 business days of the note date, certification prepared by the lender, and evidence of current work that indicates the business is still operating the day the lender verifies the self-employment, business website demonstrating activity that supports current business operations, meaning you can make appointments online or call to get service estimates and stuff. So they mailed that to me today. That was something new too.
So I want to make sure that if you're self-employed, you're situated in a way that you're still able to make an income during COVID.
Even after they've issued their close on the file. Our closing department is what would then kind of get that additional items needed list, and then have to go back to the borrowers, unfortunately, but it's all because of COVID.
So I guess you kind of answered this before too, David. Are there any like big red X's that are new, hard stops that are new because of COVID that you didn't see before?
No, there aren't any fatal errors in a file that we didn't see before, but the things, I'll give you an example. Commissioned realtors, right? Had a great July, didn't close much in August. Had a great September. If you do a 3-month average, your income is just fine, but they won't do a 3-month average anymore. They're going to ignore your great July and only rely on your August and September. Well, now, based on those 2 months, you don't income qualify. So you might have to wait until October so you can average September and October income. And I'm actually going through this right now with a commissioned salesperson. They won't look at year-to-date performance. They should, but they will not.
Well, that's interesting to know, because like for instance, our business, like many businesses, is highly seasonal.
Sure.
So any given month, when we go into off season, typically like this fall, and the falls are usually our slower time for closings, our income is significantly different than it is in the spring. So they're not looking at a longer term. They're there because they're concerned that people are losing their income because of the current situation. They're just ratcheting down and looking at the very recent income.
You understand it correctly. So it would make sense to speak frankly with your loan officer and strategize. You may conclude, you know what? I wish to refinance, but it doesn't make sense to do it in August. Let's talk about this in November. Just a little bit of strategy can save a lot of headache.
That's very interesting. And I'm assuming that's the same for new home mortgages as well at this point?
Yeah, this really is not a refinance specific conversation. If you're self-employed trying to get a purchase money loan, it's the same criterion.
Right.
Interesting.
Yeah.
Okay. I didn't know that. That's new information.
I did look up one of our underwriting guidelines because I was curious with another one of our preferred lenders, because we work with several, of course, but one of them, which was, I guess, kind of a nice overlay, David, you might be able to emphasize a little bit more, but the P&Ls that are constantly required now to update as we move forward, if they're unaudited P&Ls for self-employed borrowers, 2 months bank statements, business bank statements are required. So as David said, we could see where that income's at. If they are audited actual CPA, then P&L and balance sheets are all we need.
But no small business has CPA audited P&Ls. Nobody has those.
Right. Yeah.
No, certainly not on a given, not for the last 2 months. I mean, you're just not gonna, that's not how businesses operate, small businesses operate. Yeah.
No.
Right.
So if you should plan perhaps to refinance, what are some tips that you would give to folks that want to be in the best possible position to get the best interest rate and term possible?
First, don't initiate any new credit. Don't get a new credit card. Don't buy a new car or washing machine or furniture. No new credit. That's critical. Get all your deposits in one place if you can. You know, if you have 3 or 4 different accounts and we have to source each account and you need 2 month statements on each account, all of a sudden you're looking at 8, 12 bank account statements and it gets confusing. So consolidate your resources if you can. Those are the 2 biggies right there.
Okay, I want to say that during our process, my car lease ended. So we just stopped, and I've been using our 2007 Suburban in the meantime, which is about ready to stop. And now we're going to do another lease. But I did ask David during the process, and he said if you got a lease during that loan process, then that would be okay because that's an expense. But if I bought the car, that might not be okay. Is that right?
You're close. If you have a vehicle leased and they're nearing the end of your lease, you can't claim that I'm just not going to get any new payments. They're going to presume you replace your lease with another lease, and they're going to hit you for that liability, whether you plan to get a new vehicle or not. They don't care what you do. If you have a purchase loan and it's about to be paid out within 10 months, they ignore that liability. So there's really no plus or minus to how you finance your vehicle, but there could be some pluses or minuses to how the underwriter views that liability if you're tight on debt to income ratios.
Okay. So you mentioned the underwriter. Tell us how the loan processor and the underwriter communicate. And the loan processing is done in the bank, and then the underwriter is a different company altogether. What's that?
Well, Kristin, I'll let her speak to it in a moment, but the underwriter is a third party who doesn't care if we're happy or sad. They just want a perfectly underwritten file. No compliance, no compliance issues. All the disclosures were sent on time and acknowledged. Everything's verified to Fannie Mae or Freddie Mac's satisfaction. That's their only concern. How long it takes, whether we think the process is fair or not, if our customers are satisfied or not, no interest to them. Now, Kristin will speak. How do you communicate with your underwriters?
We communicate by email and phone, and we communicate very frequently on every file with all of the underwriters.
So do you always have a certain group of underwriters that you work with, and they are the same for the Smith file or the Jacobs file or whatever file?
Not necessarily, but typically the way when we submit a file in for the initial review and an underwriter's chosen, how they determine that, I'm not sure, but we've been working with them for so long. So I may get an underwriter that I just had on 2 previous files, or I may have an underwriter that I have on the same 3 other files that I'm working on now. So we're all pretty familiar with each other.
And so on a similar note, it's kind of I think a little mystery to people that aren't in the banking industry is that we know that there has to be an appraisal, and an appraiser is sent to the property to review it. How is that appraiser selected, and how would it be different, let's say, working with a community bank versus maybe a national bank? Is there any differences, or is it exactly the same?
Well, in the first instance, we have an appraisal. We are often getting what are called property inspection waivers. As the automated valuation models get more and more effective, more and more reliable, we're not always getting appraisals anymore. And Kristin can speak to this, but 35, 40% are getting PIWs. Yeah. So it isn't that we'll always get an appraisal, but we select them. We have a panel of appraisers. They're local people that we will order our appraisals from. And that would be, I think, the advantage of a community bank. If you were with a national lender, they're almost always going to use an appraisal management company, which will be some centralized firm in Tampa or Orlando. And then they'll place the appraisals out for bid, and you may or may not get an appraiser familiar with your community. And we have used AMCs ourselves. We have. Sometimes you just have to. But again, we go right to our panel of appraisers that we have vetted and been approved by our board of directors.
Okay, that's good to know, because I mean, from our perspective, you know, Sanibel Island, particularly in our market, the homes are there's a lot more unique properties, or properties that may not have simple or easy comps to do versus maybe some more traditional neighborhoods would have. And you know, it's always discouraging when we see an appraiser coming from a completely different part of the state, driving over to Sanibel and having no familiarity with the island, and that just being across the street, you know, one side of the street is worth a whole lot more than the other side of the street when it's on the Gulf of Mexico, or things like that. And it's very hard to establish what that value might be if they have no exposure to that. So that's a challenge we've had sometimes when people have worked with banks from out of state, and I guess that's what they're doing. They're using that type of pool or service you're talking about. And then they're just getting an appraiser, and that appraiser could be coming, we've seen them come from pretty far away. To do that. So on another note, talking about Sanibel, obviously the properties are worth quite a bit on Sanibel, and we're often in the jumbo loan territory. Is there any differences that you've seen with how jumbo loans are being handled versus conforming loans, especially in the last, since COVID, or anything has changed?
Well, jumbo loans essentially have adopted the agency underwriting guidelines. I mean, why reinvent the wheel? So their underwriting very much resembles Fannie and Freddie, but they are more stringent. And where I see it most glaringly is in the amount of reserves required. They want a lot of reserves where Fannie and Freddie do not. They haven't really changed the reserve requirement, but the jumbo market has.
So when you say reserves, you mean cash reserves of the borrowers to handle their expenses without income for a period of time.
Right. They just want to be able to take care of things for as much as 6 or 9 months, a year in some cases.
Wow. Okay.
After closing, once you have enough cash left over to make your payments if all income were to cease. And that's different, and that probably will go away when COVID is managed, whenever that is.
Okay. Interesting. And then just for people that aren't familiar with this, what defines a jumbo loan versus a conforming loan?
The conforming limit is $510,400 in this market in Lee County. So $401 makes it a jumbo. $510,400. That's your conforming limit.
Okay.
Yeah. So can you talk a little bit about the options when you refinance? you can choose fixed, variable. What are some of the options that SanCat provides?
Well, the list is really exhaustive. There's 5-1, 10-1, 7-1, 15-1 arms, 30-year fixed, 15, 20-year fixed. But the marketplace right now in the conforming arena is really targeted at 30-year fixed because they're based off 10-year treasuries. And you'll often see a 30-year fixed price very nearly the same as a 15-year fixed. So the value play in conforming is the 30-year fixed. The jumbo market is not controlled by government-sponsored entities. It's a true marketplace. And as you might expect, it's more representative of a real market. It's not driven just by 10-year treasuries. And in the jumbo marketplace, you might find yourselves liking a 7-1 or a 10-1 arm versus a 30-year fixed. And for most families, if your initial fixed rate period is a decade, at 10 years at a fixed rate, that's long enough. That's about as long as we live anywhere in America, actually longer. The average mortgage is paid off in 7 years. So a 10-1 arm takes care of most families.
Mhm. All right.
Interesting. Well, do you have any questions for us?
Or anything else you'd like to add?
I would like to say one thing about rates, because when people see rates advertised, they're almost always exclusively purchase money loans. But the FHFA, which is the Federal Home Finance Agency, just imposed a 0.5% fee on all refinances. So if you're getting a conforming loan, $510,400 or less, that fee is going to be baked into the rate. So if you see a rate advertised at 2.8, which you just might see for a 30-year fixed on a purchase loan, that's not the rate you'll receive on your refinance loan. You'll be more like 3 1/8 or 3 1/4 on your refinance. And that is from FHFA. That's in my opinion, a money grab by this federal agency. They just wanted to participate in some of that refinance activity going on, and they just imposed a fee out of nowhere.
Mm-hmm.
I'm glad you brought that up because that happened to us, and I'm in real estate. I didn't realize that that the fee for refinancing would be higher than the advertised rates.
Well, in October of this year, or September rather, it wasn't. It's a brand new thing.
Mm-hmm.
Mm-hmm.
Joy. Oh well. I mean, really, the rates are so incredible. When Jim and I got married, our first loan was how high? Like 11%?
No. Our first loan was 8 1/4.
In way back when?
Mm-hmm.
Okay.
It was 8.
Well, 8% would have probably been a good rate back then.
It was a good. We were very pleased with it.
1992.
We were very pleased with the rate. We thought, oh wow, this is a good interest rate. So it is all relative.
Yeah, so I think I'm super happy with our refinance. I'm glad that we have a great rate. We are contrary to how I guess the majority of Americans. Our first home we were in for over 15 years, maybe 18 years.
Mm-hmm.
And then our home now we've been in 13 years.
Yeah. And hopefully
And we don't
quite a
plan
few
on
more
moving.
years. Yeah.
Yeah.
Yeah. My chance to say you don't look old enough. Isn't that?
That's why I love you.
How was when you recently had your refinance with us? How do you feel the process was on your end? It was good.
I think it was longer than I would have wanted, and that's not anything you all could have done anything about. It was a system issue, not a SanCat issue. So I love the fact I tend to want to be a little bit more hands-on. So I love the fact that I knew my loan processor's name, email, and cell phone. And I could check in with him periodically to say, hey, Ross, how's it going? And he was excellent at getting back to me. I love David and Amy were spot on every, if I sent an email out one day, I got a response within 24 hours.
Yeah.
And
the communication couldn't have been better.
Yeah, it was awesome. Thank you for asking. That's a great question. Super happy.
Good.
All right. Well, any other questions? Tiffany, any questions that you can think of?
Nope, I haven't seen any come in yet.
Okay. All right. Well, if you all are okay and don't have more questions, I think we can finish up. But I want to thank you both so much for spending time with us today. Just a reminder to everybody, SanCat Bank is not just on Sanibel-Captiva Island. It is also in Fort Myers with a number of locations. How many?
6.
6.
We have
I'm going to add in the new one we just opened.
Yeah, so if you live in Fort Myers, SanCap is a great alternative for you. My parents live in Fort Myers, they use SanCap Bank.
And the Cape as well.
I'm sorry?
The Cape as well. We don't have offices in the Cape, but we've got offices that are close to downtown Fort Myers if you're closer to the North Cape or North Fort Myers, and right over the Cape Parkway Bridge in Fort Myers.
Yeah, perfect, perfect. Well, it's a great bank, 472-239-472-6100 is the main number for Sanibel-Captiva. How do I know that? Like off the top of my head. How do I know that?
Because you're calling it a lot.
I'm calling it all. Yeah, for years I've been calling it a lot. But anyhow, 239-472-6100, SanCap Bank. If David's busy, there are a number of wonderful loan officers that can help you. Sorry about that. So please reach out to dwright@sancapbank.com, and our contact information, Susan and Jim McCallion at McCallion and McCallion Realty. We have the website sanibelrealestateguide.com. Log on or go to McCallionRealty.com. You can reach us at 239-472-1950. We're always here for you. We have a great team of professionals that care about your home buying and selling experience. All right. Thank you, guys.
Thank you so much.
Wonderful day. And
Nice meeting you.
thanks for refinancing our house.
Yes.
Thank you.
Thank you.
Bye.
Bye.